Good morning, everybody. I hope you're doing well. Today we'll be understanding a foundation chapter, CA foundation chapter. Okay, let's take for example, there's a party, Mr. X, who sold goods to Mr. Y. The sale value of the goods was rupees 1 lakh, and this is a credit sale wherein Mr. Y would get 3 months of time period to repay the money. This transaction took place on 1st of May. Now, when Mr. X would have sold goods to Mr. Y, the journal entry Mr. X would have passed. Now see, there are two aspects. One, sale has happened, and then second, can I say receivable from Y? So because it is receivable from Y, he's our asset increase debit, and sale is the income increase credit. So the journal entry Mr. X would pass is Y account debit to sales account. 1 lakh rupees. Okay. Now, in the books of Mr. Y, he has purchased goods. Purchase is a expense. Expense increase debit, and you have to pay to Mr. X. Therefore, it is a liability. Liability increase credit. So, the journal entry Mr. Y would pass is purchase account debit to Mr. X account or to X account. ₹1 lakh. Okay. Now, this transaction took place on 1st May. Therefore, this entry, both the entries, Mr. Y and Mr. X would also pass on 1st May itself. Now, thinking 1st May, 3 months time. So, May, June, July. So, then it becomes 1st of August that Mr. Y has to repay. Now, so what Mr. X does, Mr. X is the party who has to receive the money, and Mr. Y is the party who has to pay the money. So we are talking about the party who has to receive money. Okay. So Mr. X, who has to receive money, he will write a note asking Mr. Y to pay 1 lakh rupees on 1st of August. Okay. He writes a note asking Mr. Y to pay 1 lakh rupees on 1st of August. This note is called as a bill, and the chapter that we are trying to understand is bills of exchange. Clear till here? Okay. Now, since Mr. X is writing, can I say he will be called as the drawer of the bill, because he is the one who is writing, and the other party will be called as drawee of the bill. Okay. Now, so Mr. X draws a bill on Mr. Y. So it's a piece of paper that the bill is drawn. Okay. Now this piece of paper, can I say from Mr. X's point of view, towards this paper, you have to receive 1 lakh rupees. Correct? So towards this paper, you have to receive. Therefore, it is an asset. And from Mr. Y's point of view, towards this paper, you have to pay money. Therefore, from Mr. Y, it is a liability. Now, because this bill is for a short duration, that is only 3 months, therefore, for Mr. X, this will be a current asset, and for Mr. Y, it will be a current liability. Okay. Now, this current asset from Mr. X's point of view is called as bills receivable. And from Mr. Y's point of view will be called as bills payable. Okay. Now, coming to the journal entry point of view, this is an asset increase debit. So, bills receivable account debit to Mr. Y account, and from the other party's point of view, that is Mr. Y's point of view, bills payable liability will always be credited when it is increasing. And what will be debited? X account. Okay. So what this technically means is, for the bill, for the sales made, you are going to receive from a bill, and for the purchasers made, you're going to pay towards the bill, because X account and X account got cancelled, Y account and Y account got cancelled. So technically for the sales made, I'm receiving from a bill, and for the purchasers made, I'm paying towards the bill. Clear till here? Now, on what date this entry will be passed? So that date is called as due date. Okay. So my due date will be calculated as date of drawing plus the period or the tenure of the bill plus 3 days of grace. So you give 3 days extra grace period. Okay. So in our case, date of drawing the bill is 1/5 plus 3 months. So 3 months will land us to 1/8 plus 3 days of grace days. So my grace days, my date becomes 4th of August. So this entry will be passed. So this entry will also be on 1st May only, when the receivable towards the bill will be 4th of August. Am I clear till here? Now, before we go into more deeper into the chapter, let's understand this due date with a few more examples. Okay. Now let's take, for example, my date of drawing is 7th of September, and tenure given is 2 months. Okay. So if you add 9 plus 2, 11. So 7, 11, correct? And 3 days of grace days. So it becomes 7, 8, 9, 10, 10, 11. So this is your due date. So when the duration is given in months, you will directly add to the months. Okay. Now let's take another example. The due date of drawing is 31st Jan, and the duration is 1 month. Okay. So can I say that lands up to 31st of February? But obviously we know that there is no 31st in February, correct? There is 28 days in February. So when the date does not exist in the month, okay, then the last day of the month becomes the due date. So that is 28th February, and then you add 3 days of grace. So 3rd of March will become your due date. Okay. Now, so this is the case when months are given. When the tenure is given in days form. For example, my due date or date of drawing is 1st of May, and the tenure is 30 days. Okay. So now what do? You add the days. You don't add to the months, you add to the days. So 31st of May. So May has 31 days. So this is correct. And then you add 3 days of grace days. So you get 3rd of June. Clear till here? Chalo. So when months is given, you directly add to the months, and then you check if the date is available in the month or not. If the date is not available, then the last day of the month becomes the due date, and then you add 3 days of grace days. And when it is given in the days form, you will add to the specific days, and then you also add 3 days of extra days. But now, sometimes in the question, they also say that 10/11 was an emergency holiday. Then what do? Your due date becomes 11/11. Okay, so whenever it is a emergency holiday, then the next day becomes the due date. But whenever it is a known holiday, then the previous day becomes the due date. Once more, whenever it is a emergency holiday, then it is a next day. Okay, but whenever it is a known holiday, it becomes the previous day. Ma'am, what is the logic? See, when you know that already, this date will be your holiday. So you did one way. 1 day before. But can I say this emergency holiday? You will never know. Like it comes emergency. So therefore, it becomes the next day. Now, coming to the bills of exchange chapter. Now, on the date of drawing, that is on 1st May itself, the drawer, Mr. X, has 4 options available with him. So here we are going to discuss options available with the drawer on the date of drawing. Right? Options available with drawer on the date of drawing. So please remember, please remember, I know I'm repeating. Please remember this is on date of drawing on 1st May. I'm not talking about 4th of August. Okay. I'm talking about 1st May. Okay. Now on the date of drawing, 4 options are available with the drawer. Okay. Let's take one by one. First option available is retain the bill. The first option available is retain the bill. Retain the bill means 1st of May you drew the bill. Towards the bill you will receive the money on 4th of August. So you wait. You hold the bill during the period and at the end of the period you will receive the money. So this is called as retaining the bill. Okay. So since you are retaining the bill, can I say there is no action taken? Like you're not doing anything. You're just holding it the bill. Correct? So for the bill, you have already passed the entry. That is bills of exchange to here. Bills of exchange to Y. Correct? So that entry you have already passed. So now we won't pass any entry. So when the drawer decides to retain the bill, therefore you will not pass any entry in the books of drawer. Okay? Now the second, the drawer decides to discount the bill. Okay, the drawer decides to discount the bill. Now, what is discounting? Let's take an example. You are Mr. X. There is a party, Mr. Y. Okay. Mr. X sold goods to Mr. Y for rupees 1 lakh on 1st May. When is he going to receive money towards this? 4th of August. So, but today, as on today, Mr. X wants money. If he goes and asks Mr. Y, obviously Mr. Y will not pay. So what Mr. X does, he goes to a third party. The third party is called as bank. Okay, you go to the bank and you tell the bank, I have a bill. Towards this bill, I will receive money after 3 months, but I want the money today. So you do one thing, you give me the money today, and after 3 months, you collect the bill from Mr. Y. Or money from Mr. Y. Am I clear? You take money from bank today and the bank will collect money from Mr. Y after 3 months. Clear till here? Okay, so the bank told, I will get money after 3 months. So I will do one thing. You give me a bill worth 1 lakh rupees. In return, I will give you cash only 98,000. Okay, because I have to hold the bill for 3 months and after 3 months I will receive the money. Therefore, towards the bill, I will give you only 98,000. So something is, so lot more is better than nothing. So therefore, Mr. X agrees. So what Mr. X does is, he gives the bill. So for Mr. X, can I say bill is going out? So therefore, bill will be credited with rupees 1 lakh. Towards this, what is coming in? Cash. Cash is an asset. Asset increase debit. So therefore, cash account will be debited with rupees only 98,000. And this 2,000 is called as discounting charges. Again, it is an expense for us. So therefore, we debit it. Clear? Okay. Ma'am, what in the books of Y? First, we are discussing only in the books of X. That is the drawer. I'll come to books of Mr. Y a little later. Okay. Now, the third option. So, you have a party. Now, the third option is, Okay, I'll just take an example first. There is a party X, you are X, you have to receive money from Y again after 3 months. But there's another party, Mr. A. He wants, you have to pay him money, 1 lakh rupees after 3 months. So what do you do? What do you do? What do you do? You tell Mr. A, listen, I have to receive from Y and I have to pay you. So instead of me receiving and then paying, let's do one thing. You directly collect from Mr. Y. So I will do one thing. I will give you a bill. You take that bill after 3 months, go and collect money from Mr. Y. So this process wherein A, X, Y, X removes out of the transaction, Y will directly pay to Mr. A. A, X, Y, X removes out of the transaction, Y will directly pay to Mr. A is called as endorsement. Okay, this is called as endorsing the bill. So you give this guy for you will be a creditor and this guy for you will be a debtor. So receivable from a debtor, payable to a creditor, the debtor will directly pay to the creditor. Clear till here? So this is called as endorsement of the bill. So the bill is endorsed to the creditor. Now again, for you, can I say the bill is going out? So the bill will be credited. So to bills receivable account rupees 1 lakh. And whom will you debit? Now see this creditor. Creditor is a liability, but can I say this liability will decrease? So decrease of the liability will be debited. So creditor account debit. Clear? This is called as endorsement of the bill. And the last option is bill sent for collection. Now, bill sent for collection. Now, what does this mean? The drawer, Mr. X, has decided to retain the bill. The drawer has decided to retain the bill, but he is very scared. If he keeps it with himself, he might lose it. So what he does, he gives it to the bank. Now, mind you, it is not discounting. I'm not discounting with the bank. I'm just telling bank, you keep it. On the due date, you go to Mr. Y and collect the money on my behalf and put it into my account. This is called as bill sent for collection. Now see, you have to understand. The difference between discounting and BSC. Discounting is you will receive money today. Bill sent for collection is you will receive money on due date. In discounting, the bill is gone. In bill sent for collection, bank is holding on behalf of you. Okay. So now your bill goes out. Therefore, you will credit your bills receivable account and debit bill sent for collection account. Again, that will be 1 lakh. Okay. So in this case also, the bill is going out, but you're not discounting. Your bank is holding it, and bank on the due date on your behalf will go and collect it from Mr. Y and put the money in your account. So in these three cases, the bill is going out. In the first case, you are holding the bill. That's why no entry. Okay. Now, so these were the entries in the books of Mr. X. That is the drawer. Now coming to the, okay, before that, just a second, before that. Now, I told you this discounting charges is the expense for you. Okay. So there's a formula to calculate this interest or discounting charges. The formula is generally amount into percentage into months divided by 12. Many students forget this. Always. So many batches I've taken. Every student always forgets this. Months divided by 12, they always forget. The question would have given 1 lakh. The question would have given some percentage, let's say 5%. 1 lakh into 5%, 5,000 directly. No. 1 lakh into 5% into months divided by 12. Now in our case, can I say the bill is for 3 months? So 3 divided by 12. Always you have to do. Okay. And sometimes if the bill is discounted in between the period, then you will calculate the remaining days and do it. Okay, so please don't forget it. Or let's say this month's can be replaced with unexpired period of the bill. Okay, so now you will not forget. Now, coming to the books of drawee, that is Mr. Y. Now, if the drawer retains the bill, now again, this is on the date of drawing, 1st May. If the drawer retains the bill, no entry. So here also no entry. If the drawer discounts the bill with the bank, then if the drawer is discounting the bill with the bank, there's a transaction between bank and the drawer. There is nothing involving for Mr. Y. Whether to pay Mr. X or to bank, it does not matter. For you, you are paying towards the bill. You're not paying to the party. You're paying towards the bill. Therefore, again, no entry. If the bill is again endorsed, again you have to pay, whether you have to pay to X or A, it does not matter. You're paying towards the bill and not the party. Therefore, no entry. And again, same explanation. Therefore, on the date of drawing, whatever the drawer does, there is no effect in the books of drawee. Am I clear till here? Chalo. Now, so this is the journal entry on the date of drawing. Just a second. So no entry, no entry, no entry. So this is on the date of drawing. Now on the due date, that is on 4th of August, there are two options with the drawer. The two things may happen. One, the drawee will honor the bill or he will dishonor the bill. Now what is honor the bill? Honor the bill means he will pay towards the bill. What is dishonoring of the bill? Means he will not pay. He will dishonor. He said, I don't have money. Okay, so either of the thing can happen. Now let's take each of them and understand what journal entry in each of the 4 cases in both of their books. Okay, very, very, very easy. Let's start. Now first we will take honor the bill. Okay, if the bill is being honored, then what to do? What will happen? Now, let's say if he has retained the bill, okay, I'll just write honor here. So, okay, then what will happen? In the books of drawer, means he is paying. So cash will come in. So cash is cash account, cash or bank account gets debited. And 2, this is towards bills receivable account. 1 lakh. Clear? Okay. Now, second scenario, bill is being discounted with the bank. Bank has the bill on the due date. Bank went to Mr. Y to collect the money. Y paid to the bank. That's it. Transaction finished. So can I say nothing is for you in this? So therefore, no entry. Third scenario, Mr. Creditor, that is A. A went to Y to collect the money. Y paid the money to Mr. A. Therefore, the transaction is complete. Nothing is in for you. So therefore, no entry. Lastly, bank on your behalf. This is not discounted, huh? Bank on your behalf went to Mr. Y to collect the money. Y paid the money. Therefore, bank came and put the money into your account. So bank will increase. Bank is an asset. Asset increase debit. So bank account debit to BSC. Bill sent for collection account. 1 lakh. Okay. Now let's come to Mr. Y's books. First, can I say if the bill has been retained, then Mr. X will come to collect the money. If the bill has been discounted, then bank will come to collect the money. If the bill is being endorsed, then creditor will come to collect the money. And if the bill is being sent for collection, then the bank will come for collect the money. But in all the 4 cases, you are not paying to the party, you are paying towards the bill. Correct? So for you, the bill value will decrease and your cash will go out. Correct? Correct, everybody? So in either of the 4 cases, there will be only 1 entry. It does not matter which case it is. There will be only 1 entry. Or sorry, same entry in each case. for you the bill will go out. So liability will decrease. Hence we will debit it. So bills payable account debit to cash or bank. That is cash or bank is your asset. Asset will decrease. Hence we will credit it. Cash bank, whatever you pay. So 1 lakh. Okay, once more, you are not paying to the party, you are paying towards the bill. So in all the 4 cases, the entry will be the same. Bills payable to cash bank. Am I clear till here? Chalo, let's go to the last part. The last part is on the due date, the bill is being dishonored. If the bill gets dishonored, then what to do? Okay, now again, this is also on 4.8. This is a second, okay, second thing. Now, if the bill gets dishonored, in the books of drawer, what entry we will pass first? If the bill is, you have retained the bill, then you have the bill will be closed because the bill expires, therefore we have to close it, and you will debit it. Again, you will accounted receivable from Mr. Y, 1 lakh. Okay. If the bill was discounted with the bank, then can I say bank went to Mr. Y to collect money? Mr. Y did not pay. Then bank will come and hold your neck. That is Mr. X next. So bank will take money from your account. Therefore, for your bank account will decrease. Hence, credit the bank and you will account it receivable from Mr. Y. Okay. Third option, creditor went to Mr. Y to collect money. Mr. Y did not pay. Therefore, creditor will again come and ask you. So, payable to the creditor, creditor will increase. Okay. And again, you will account it receivable from your debtor. So, Y account debit. Okay. And lastly, bill sent for collection, not paid bill. You will close your bill sent for collection account and accounted receivable from Mr. Y. Okay. Now, can I say in all the 4 cases, you are debiting the drawee, and if it was retained, credit the bill because you had the bill. If it was discounted, credit the bank because you have to pay the bank. If it is endorsed, to credit the creditor because payable to the creditor. And if it was bill sent for collection, then you credit bill sent for collection account. So can I say in all the 4 cases, you will debit the drawee account. Okay. Now, lastly, if the bill is discounted and if the bill is on the due date, if the bill is dishonored, then what entry will the drawee pass? Okay. Now, again, you are not paying to the party, you are paying towards the bill. You did not pay, correct? But bills should be get closed. So therefore, bill payable account will be debited. Now, in all the 4 cases, can I say if the drawee is debiting you, then you have to credit the drawer. Okay, because for you it will be payable to the drawer and not anybody else. Because see, bank is going and collecting from the drawer. Creditor is also collecting from the drawer itself. So for you, you have to pay to the drawer. So therefore, you will credit the drawer. Am I clear till here? Chalo, if you have any doubt, please mention in the comments. I will definitely reply. Thank you so much for watching. Bye, guys.